Welcome to Market Recap Live. I am your host, Joseph Martin, and thank God it's Thursday, guys. And tonight we are taking a look at ticker LYFT. You might know them better as LYFT. LYFT Incorporated was founded in 2012 by Logan Green and John Zimmer, with the first headquarters opening in San Francisco, California. Now they are publicly traded on the NASDAQ and have a market value over $5 billion. Yes, that's with a B, billion dollars. LYFT is in the passenger transportation industry in the industrial sector, and they aren't listed in the S&P 500 index. Some of LYFT's competitors are Uber Technologies, ticker UBER, Grab Holdings, ticker GRAB, and DoorDash, ticker DASH. We're going to review LYFT's earnings, their website, and visit their charts to perform a quick technical analysis. But before we do that, let's do our roll call and check our stream poll. We are streaming live on YouTube and Facebook. Let's get this chat going and tell us where you're tuning in from. Put a YT in the chat if you're tuning in from YouTube, and put an FB in the chat if you're tuning in from Facebook. While you guys are filling up the stream and the chat, here's the mission statement. We are building a community over here for people who want to take control of their financial situation by learning how to unlock the wealth building power of the stock market. And we are streaming Monday through Friday following trading sessions at 11 p.m. Eastern time. The U.S. stock market regular trading hours are 9:30 a.m. to 4 p.m. Eastern time. And there's a link for the New York Stock Exchange calendar down in the description. Okay, let's get to these earnings. Here we go. All right. LYFT Incorporated. Wait a minute. We don't have a website up. Boy, I was on a roll, wasn't I? Here we go. Let's get the website up there now. There we go. Okay. LYFT Incorporated, ticker symbol LYFT, the $5.4 billion company, reported its first quarter earnings Thursday, May 7th. They have a 52-week high of $25.54, which took place on November 12th, and a 52-week low of $12.31 that occurred on May 7th last year, which is a trading range of $13.23. And they closed today at $14.16. LYFT Incorporated earnings report beat on the top line, reporting revenue of $1.65 billion, which was higher than the market expectations of $1.64 billion, but missed on the bottom line as strong bookings growth was offset by margin pressures. EPS was lower than the analyst and market expectations of 6 cents when they reported an adjusted EPS of 4 cents. LYFT Incorporated reported a GAAP net income of $14.2 million, which was higher than the $2.6 million net income they reported this same quarter last year. This represents an increase of 446%, 0.2%. to be precise. So for the first fiscal quarter of 2025, their net profit, wait a minute, let's go back let's go back. We're going to get this right. This represents an increase of 446.2%. So for the first fiscal quarter of 2025, their net profit was approximately 81.7% lower than it is compared to now a year later. The earnings were released after the market closed, followed by a 5 p.m. Eastern time conference call. As far as guidance, management expects second quarter gross bookings to grow 18 to 21% year over year. That 52-week high compared to today's closing price of $14.16 represents a decline of 44.6% over a span of approximately 6 months. So if someone invested $1,000 in November at that 52-week high of $25.54, they will be seeing a loss of $445.58. All right, let's go here. Let's talk about why we visit these company websites. We're looking at the visuals and text to find answers to these key questions. What goods and or services does the company sell? How important are those goods and services to their customers? What makes this company stand out from the competition? And how well do they take care of their employees? To find those answers, we browse 4 key areas: the homepage for the goods and or services, about us for purpose, vision, and mission statements, careers for employee benefits and opportunities, and investor relations for SEC filings and stock quotes. And for your convenience, all companies featured in tonight's live stream are down in the description. Their websites are down there. Now let's go back to LYFT's website. All right, let's go over here, blow this up so it will be ready, and bam. We got that. We got them on the screen, and we need this. All right. Thank you guys for tuning in. Hit that like button. I definitely would appreciate it. All right. So we are on LYFT's homepage, and they are not into as much stuff as Uber is into. They're just doing rideshare as of right now. So we know what they're doing. And I think they're getting off into autonomous vehicles as well. So we're going to scroll over the home page, and then we're going to go to, because they contract people, this might be a little different tonight, so let's just go with the flow. Let's scroll over the home page and see what we can find. The world awaits. No matter where you're headed, we'll help you get there. Shift into earnings mode. Apply to drive. So of course they have some employees, but as far as the drivers, they're contracted. They're independent contractors. So that's why I got a little thrown off when I thought about looking at their website for careers tonight, because the drivers are independent contractors, but I'm sure they have different roles within the company where you would sign up as an employee and work in a different department. So we're going to see, they do have careers on here. So they have careers. So we're going to look there. What else are we going to look at? Let me take me off the screen so we can see. So they talk about the driver, which I was talking about here. So this is going to be contracted, and this is for the customers right here, the riders. And then this is the company information section. So that's where we need to look, so I can put me back on the screen. So we're going to look at careers. They mentioned something about healthcare. I didn't know about that. So we'll look at that. Oh, and they do rent scooters and bikes, and they're talking about the autonomous vehicles. So they do autonomous vehicles now, and they have LYFT ads. So I don't know how much revenue they make off of that, but the app that they use when people pick up rides or ask for rides or request rides, they put advertisements in there. So they charge companies to advertise on their platform. So that's another way they bring revenue in. Developers LYFT rate. So we have investors relations. So we definitely going to go there. We're going to look at healthcare, and we're going to look at careers. I don't think we can really click on LYFT. So I don't see anything that's going to talk about maybe business. Yeah, let's just click around. Let's see. So let's go to business. Remember, the websites are down in the description for your convenience if you want to check them out on your own time. Open the door to more for your team. Create an account, upgrade experiences, save time. So what I'm thinking this is for businesses to hire LYFT as some type of service within their own business. That's what I'm thinking this is. We'll help you find the right solution for your organization's unique needs, whether it's concierge, LYFT Pass, or business travel programs. Yeah, I think that's what this is. This allows businesses to, I guess, open up an account so they can request rides for whoever they want to request rides for instead of like an individual person. So that's not talking about the company. So let's go ahead and go to careers. Let's go to careers and see what we can find. Working at LYFT, building a more connected world ride by ride. So they talk about searching job openings, whether it's an everyday commute or a journey that changes everything. We are driven by our purpose to serve and connect. So that's the closest thing we done found to a purpose statement so far. So life at LYFT, early talent programs, belonging at LYFT. Okay, so here are the different departments outside of the drivers that I was talking about. So we know that the drivers are contracted. So they have accounting and finance, administrative. These are all the different departments. This is crazy. So I used to drive for Lyft and Uber. And man, it is a job. Like, it's a job. Like, you got the flexibility and the freedom to work whenever you want, but you get paid more for driving at certain times. So like Peter Lynch, I'm going off into some other stuff, but Peter Lynch talks about having an edge when it comes to trading or investing by actually working for or being a customer of a business or a company that you are already familiar with. So that kind of gave me an edge by being able to work for the company and hearing how, yeah, it's crazy. So hearing how riders like the company, whether or not they preferred them over Uber, just their feedback when I would be driving them around, I would be able to get inside information from a customer's perspective just by working and talking to the passengers or whatever. So yeah, that's a little tidbit or something to keep in mind. And Peter Lynch was a very, very famous, very I don't know what's been going on the last couple of days with me drawing these blanks. Successful, that's the word I'm looking for. Successful portfolio manager, like a big manager for funds, fund manager, that's what it was. And the company name was Magellan. Very successful. I think one of his biggest investments was Taco Bell. So look him up. I believe he has 3 books. So Life at LYFT and things like that. Okay, we scrolled over that. Let's go to healthcare and see what we can find. 4 people are in here. Appreciate you guys for tuning in. Hit that like button. I definitely would appreciate it. The quickest route to healthy. The quickest route to healthy. All right, what's up with the healthcare? What's up with the benefits? Here's a video. I'm not going to play it. Links are in the description if you want to check this video out. We're reliable, we're quick, and we're committed to earning your trust. So I guess now they're offering healthcare through LYFT. If you're an independent contractor, that's when I'm gonna have to look deeper into this. We don't have time for us to do all this tonight. I want to move a little bit faster, but that's definitely something I would look into. But I'm gonna give you guys some real game, so stick around when we get over to the charts. That's what you really want to tune in for when we go over the charts about LYFT tonight. I got some stuff for you for real. So healthcare system in it, providers, payers, social determinants of health, and door-to-door support. Our healthcare products. Is that what that said? Yeah. Okay, LYFT Pass. And I think LYFT Pass gives riders like a discount so they can like pay for their rides ahead of time. And it's different benefits that they get with these different features. So I do remember that. Okay. All right. I'm ready to look for the investors relations. So let's go there. Here it is. Investor relations. Let me zoom in. We're going to get the stock information on here, and then we're going to get ready to go to the charts after I do my housekeeping announcements and all that other good stuff. So we're on the home page of investors relations. I'm going to browse over this page. Remember, the links are in the description. You want to look over this. And then I'm going to look for the stock quote information. It looks like they have some of it right here. We want to check to see if they have a dedicated page for that. So let's look up here. I'm looking for stock. Here it is, stock data. So here's the chart that they have available on the website. And here's more of the detailed stock quote information right here. I'm not sure if they have any more tools. I don't see any more tools. So that's what they have. So let's go ahead and get ready to go to the charts because I'm excited about this. Let's go here. Let's get ready to go to the charts. All right. All right. Let's go here. Give me a second. All right. Before we look at the charts, remember, professionals trade from a computer, not a mobile device. Mobile trading apps are limited. Traders lose critical detail and advanced platform features on a mobile screen. So keep in mind, trading from a phone is usually the least effective way for managing assets. To see every detail, use a full trading platform and watch these streams on a computer or TV. Only use a phone as a last resort. Now let's look at the charts for LYFT LYFT. All right. So here we go. Now, here's my quick disclaimer about this, okay? Yes, the charts are busy, but we're going to walk through it and break it down because I've been trading this company over the years because of what I see of what's going on. So I'm going to share with you what I've learned, what I've been looking at, and what's been going on. So if you've been following for the last couple of live streams, I've been talking about something called consolidation. So consolidation is when the price action of a stock moves in a tight range for a certain period of time. Okay. So we are looking at a 1 year daily chart right now. I'm going to take you back so you can look at a 10-year weekly chart for LYFT. And then we're going to come back here and I'm going to break down all this stuff you see on this chart. So let's go back. And here is a 10-year weekly chart. Now I'm going to take me off the screen so you can check this out. When LYFT first IPO'd, so if you don't know what that means, that's initial public offering. When they first got introduced to the market, LYFT was trading for $88.60. That was the high. That's what they valued this stock at, like right around here when they first IPO'd. So it would be the open of this candle. So when they first IPO, what would be the, let me zoom in right here. They opened, let me cut the floating data box on. It didn't do it. Let me do it. Okay, floating data. They opened at $87.24. So I need to do some research. But whatever they IPO'd at, you can see over 10 years, they were trading as high as $88.60. And they've came all the way down as low as $7.85 over the last 10 years. This is nuts. So somewhere in there, the valuation for this company is wrong. That's what I'm trying to tell you. It can't be right both times. So as far as like now, this company has been publicly traded. Here's 2019. So I'm just going down these lines. So 1, 2, 3, 4, 5, 6, 7. So for about 7 years, they've been publicly traded. All right. So they've had time for them to work on their company, figure things out, and go from being unprofitable to profitable. So let me show you how you can quickly glance at the charts to be able to tell that. When you look down here at the bottom, okay, I don't know how small this is or what you're looking on, but the numbers that's negative, let me take me off the screen. This is when LYFT was not profitable. So they lost, the EPS was negative 57 cents, negative $1.08, negative 118, negative $1.61, negative. So that is telling you that they weren't profitable during that time. Now, when you start looking here, you see something totally different. You see 1 cent. So that was the first time the EPS was positive. So this is showing they're starting to become profitable. Right after that news, you see the stock shot up. Okay. So now the next earnings, it was negative 3 cents. You see it went down because now they're not profitable. They losing again. So it's like, are y'all going to be profitable or not? So then the next earnings, it was positive 1 cent, 1.7 cent. Then this one, another cent. Then it shot up again and started trending up. Now it's 10 cents. It's getting larger. You see that? Then it was 11 cents. And this was crazy. It was $6.81. There has to be a story behind that. I have no idea what it was, but we can easily look that up. But let's keep it moving. And now it's 4 cents. But the idea is this company went from being unprofitable to profitable. I need you to keep that in mind. All right. So now when we look at the 1 year daily chart, we're going to go back to that word I told you that's called consolidation. So some people don't know that the company itself actually sells its own shares. Okay. I'm going to say that again because some people do not know this. Companies go public on the stock market for a reason. They're doing that to raise capital on the market. So the way they do that, they take their company, they cut the value into shares, and then they sell it on the open market. They don't have to pay for those shares. So it's kind of like printing money. If the shares are trading at $80 and you didn't have to pay for it, and you sell a share for $80, you just made $80 out of thin air. And that's why those people be so happy down on the stock floor. You see they so excited that their company is IPOing, because they're basically printing money. They're able to raise money on the open market at crazy prices. Like when we went back and we looked at the chart, LYFT was trading for $88 a share, and they didn't have to pay for those shares. They just needed to be publicly traded, and they sold those shares to the public at $88 a pop. That's crazy. So they raised a lot of money back then, all the way to that stock coming down. So now the market is flooded with these shares that people bought at those extremely high prices. And over the last 7 years, they've been holding on to those losses for a long time. I'm just painting this story to you for you to be able to see what's going on. So the opposite side of that, companies also buy their shares back. So they can sell their shares and then they can buy their shares. Now, why would they buy their shares back? They would buy their shares back because their shares is ownership. So they sell a lot of shares when the company ain't really worth anything and they trying to raise capital. They sell a bunch of shares. But once the company becomes valuable and profitable, they start using capital of their initial profits they start to make to buy the shares back. So the less shares they have on the open market, it raises the value of the shares that are still on the market. I hope that all made sense to you. I tried to break that down as simply as I could. So I need you to pay attention to what I'm showing you on the chart now that I explained that. This area right here is the consolidation I was telling you about. We can see that the stock price has been trading sideways. Now we can find out how many days this was by just using this tool right here. So I'm gonna connect this first candle and move it over to this candle that came out. It's still moving sideways. It's just between $15 and $13 now. But before it was between 14 and 13. Then it jumped up and it was between 15 and 14. But overall, it's still trending sideways. So I'm gonna count this full distance, okay? That's a regression line. That's not the right tool. I was wondering why I was acting funny. So we're going to remove that regression line. This is the tool that I need to use, this trend line. So here's the first candle. We're going to use that one and we're going to go to here. So how many days is that? So that's 84 days. So about 3 months, LYFT has been trending sideways. When they do stuff like this, there's no news. There's no positive news. They're not talking about the company. It's just extremely hush. But if the stock price is not falling and it's slowly trending sideways for the last 3 months, somebody's been buying this stock. They just been doing it quietly. So I did my due diligence and found out that LYFT is starting to buy their own shares back. So if they're buying their own shares back, then the company knows that the price that it's at right now is a bargain. Companies usually don't buy their shares back when the shares are overvalued in the market. So that's a sign that these shares are at a bargain or valuable because the company itself is buying their own shares. Look it up so you can fact check me. Just go ahead and look it up. So they had earnings today and they basically beat on everything. They're still profitable and the stock price went down, but it didn't go down by much. And I can show you exactly what happened by going over here to the minute chart, okay? So we're going to go to the minute chart and we can see that when they announced earnings after the market closed today, the stock spiked. And I had a price level up there at $15.10. So it broke. The high was $15.05 after the market closed. So when they closed today, I think it closed at $14.16, but we'll go over that in a minute. But when earnings was announced, it spiked up to 15 and then it dropped down to 13.63. And I want you to see something. It settled around 13. 75 or something like that, right? You know these simple moving averages that I have on my chart? If we go to the weekly, so we're looking at the 10-year weekly. My simple moving average lines right here, this is where it was returning to after hours when it was settling down after the earnings announcements. So if you look up at the top of the screen, it tells you the price points on my simple moving averages. I'm gonna go up and point to it because when I move, it's gonna move around. The green, you see I was jumping around? When I mouse over this candle, the green at the top says 1375. And then the white says 1402. That's where you read the simple moving averages at the top. So we're looking at a 10-year weekly chart. So that's a 9-week simple moving average and a 200-week simple moving average. So that was showing me that the price average was returning to the averages on the weekly chart. When you look at the price action on the minute chart after hours. Okay. You see how it started to return up. So I look for simple moving averages on different time frames to see where it was returning to. And it was returning to the average simple moving average lines on the weekly chart. But everything else in the earnings was quietly good. They tried to make a big deal about missing the EPS, and they missed the EPS by 2 cents. The market expected 6 cents EPS, and they announced 4 cents EPS. So it wasn't actually bad. And you can see that it went up before it went down. But they are buying their own shares. LYFT is buying their own shares right now, and they've been consistently profitable. I just showed you that when we look through the chart. So I think from my technical analysis and my research, this stock is extremely undervalued right now. How much they're worth, I have no idea, but I think that they're overvalued right now from my technicals and my research that I've done. So let's go over the stock quote for today. So let me cut on my floating data box and we can go over this because we spent a lot of time talking about why and what I was seeing, but let's get this done. So LYFT opened today at $14.41. They had a high of $14.60, and they had a low of $14.01, and they closed today at $14.16. So I was right about that, which was a trading range of 59 cents. Now, when we look at the trading volume for today was just shy of 23 million shares traded today. Now, the earnings announcement was yesterday when the market closed. So you also notice that normally when you have earnings, the volume spikes up because they would be reacting to whatever the news was, right? Well, wait a minute. They announced earnings today after market. So we need to see what the volume looks like tomorrow. I said that wrong. So tomorrow we should see a spike in volume because now the market should be reacting to the earnings that were announced after market today. Okay. So let's look at the volume, the average volume that LYFT gets during a normal trading session. So the regular volume that they get on average is 17 million shares traded in a regular session. So today was above average. And then Wednesday was below average, just slightly below it. It was 16 million shares traded in that session. So we do see increasing volume, and we should see a spike in volume tomorrow because the market will be reacting to the earnings that were announced after the market closed today. So let's talk about the volume rank percentile. So out of the most recent 252 trading days, only 36 days had more volume than today. So the volume rank percentile was 85.7%, which means today's volume was higher than 85.7% of the trading sessions out of the 252 trading days. Okay. So we went over LYFT. They were the earnings company. We did that. Okay, we can go over here. We can go back here. We moving good, guys. Thank you guys for tuning in. Hit that like button. I definitely would appreciate it. Matter of fact, that's what I'm about to ask you right here anyway. So you about to hear me say it again. Back to the community. I would appreciate it very much if you guys share the stream, hit the like button, subscribe. And if you wish to send a monetary gift to support the content, Cash App and PayPal links are down in the description as well as the ticker on the screen. Now, Let's look at what the S&P 500 index did today by using the SPY ETF. This ETF gives investors an opportunity to participate in the broader U.S. stock market by allowing them to own a percentage of each company in the S&P 500 index. Okay. Now, before I get into this, I'm going to put you onto some game. Some of the brokerages are starting to roll out stock slices. I think, well, not stocks. You're able to buy fractional shares of these companies that people feel like are too expensive. Oh, that stock costs too much, or that ETF is too high. I'm not going to be able to buy no $700 ETF, et cetera, et cetera. These brokerages are starting to offer fractional purchases. So I did some research before we started this live stream tonight, and I found that it's a few brokerages that already offer this. Fidelity was one of them. Robinhood was one of them. And Charles Schwab is rolling it out now. So this should be available on Charles Schwab platform by June. As late as June, but I believe they're rolling it out now from what I found. And you can buy $1 worth of the SPY ETF specifically. That's what they're rolling out to be able to do. So now the SPY being $700 and something is not an issue if you can buy $1 of it. If it goes up 5%, your dollar will increase by 5%. If it goes down 5%, your dollar will decrease by 5%. So that's what they're working on. And I'm going to continue to do this research and bring it to you guys to let you know what's going on. But that's what I found out today. So let's go to the chart so we can look at the SPY. So here we go. We're on the charts. Let's put the SPY ticker up there. We got the disclaimer up there. We're good. All right. So we're going to go over to the symbol box and type in SPY. Now, we already have our technicals up for the SPY because we do this every live stream. And since I've been reading my candlestick book, I actually kind of recognize this pattern that we're looking at now. So it's not quite. If it would have closed down here, like deeper into this green candle, this would have been a dark cloud cover, but it didn't quite penetrate the green candle deep enough. The wick did, but it didn't close deep enough. It needed to close through the mid body of this candle or deeper. Okay. And it would have been a bearish indicator on a pattern. Now we are looking at the 1 year daily chart, and the SPY's just been running up. We can look, it stays above this simple, it stays above this 9-day simple moving average, this dashed green line that I was telling you about. It's just trending above it. And from Tuesday to Wednesday, it actually gapped up. That's what this yellow is, if you didn't see that on that live stream. And then today, Tuesday, it got above what I put on the chart as resistance, which would have been Wednesday's high. So today they made another record high on the SPY. So now this should be moved up to 736.13. So let me edit the property, 736.13. Boom. So now that's our new area of resistance because we had a new high. So that's the only technicals adjustment we need to make. As far as support is going to be this window, this gap, and this zone right here. So if it makes it through, if it closes this window or closes that gap, I'm looking for it to find support on the $725.04 level. So that's our technicals that I'm seeing on the SPY. Now let's go ahead and get the ETF quote and give you the information about what it did today. So the SPY opened at $735.05. They had a high of $736.13 and a low of $729.75. And they closed today at $731.58, which was a trading range of $6.38. And when we look at the trading volume that happened with the ETF, with the SPY ETF today, they traded 51 million shares of this ETF. So we need to visit over here to my labels and check to see what the average trading volume is for this ETF. And we can see that the average trading volume in a session, in a daily session, is 75 million shares of this ETF. So it's still trading below average while it's making these new highs, guys. And now this volume is even lower than the previous volume. So this was Wednesday's volume at 53 million, and today was 51 million. So the volume is decreasing and it's still trading. The trading volume is still below average. So now let's talk about the volume rank percentile. Put me back on the screen. So out of the most recent 252 trading days, only 23 of those days had lower trading volume than today. And when we look at the volume rank percentile, it was 9.1%, which means that only 9.1% of the 252 trading days had lower volume than today. So the volume is very low, and it's been consistently low as it's been climbing. It's been crazy if you factor in the volume when we're looking at the technicals, all right? So we got this done. Let's move on. We didn't really have to spend a lot of time on that. So here we go. Now let's look at today's winners and losers. First, we're going to look at the loser so we can end the night on a high note. We ain't going to end the night talking about no losers. We want to win over here. So let's go back over here to the charts. Here we go. Bam. We can take the SPY off because we're done with that. So we're going to go over here to our Market Watch tab. Hit that. And now we are on the S&P 500 watch list. We have all the companies broken down, and we can see that the biggest loser for today is ticker ZTS. And I should have tried to figure out how to pronounce this name. I think it's Zoetis. That's what I think. If I'm pronouncing it wrong, my bad. But I think it's Zoetis Incorporated. And their previous close was $111.22. And they closed today at $87.31. They lost 21.5% today, guys. Woo! Yeah. So we're going to pull up this calculator and we're going to do a hypothetical to see how much somebody would have lost if they invested $300 and lost this 21.5%. So we're going to multiply this times 21.5, hit the percentage. And I'm going to remember to negate it this time because it's a loss. Now, when we hit equal, it'll be the negative. So the person would have lost $64.50 of their $300 investment. So if we add the $300 back to it, it'll take the loss away. So that person will be left with $235. Excuse me. That person will be left with $235.50. All right. So now we're going to go over here to the Analyze tab, and we're going to take a deeper look at this company. So ticker ZTS is in the healthcare sector. So if you've been following along, we've been noticing that the biggest losers have been in the communication sector and healthcare. I think that's what we saw yesterday. So we're going to check that out right now. So what we're going to do, we're going to go back to the Market Watch tab, and then we're going to go to the Visualize sub tab. All right. So now this is the heat map for the S&P 500 index. So we're going to go to the healthcare sector so we can see how the healthcare sector is performing right now as a whole, to see if the whole sector is messed up. So we're going to break this open. So we hit this drop down, pull this over so you can see it. Make sure my bald head ain't cutting it off. So right here at healthcare, We're going to drop this down. So now we have that sector pulled up. Now the company we were looking at, the worse they've done, the brighter it is. So if you notice, it's bright red. Let me take me off the screen. ZTS is bright red. It's right here in pharmaceuticals. So the whole pharmaceutical sector is doing bad except for VTRS. And we're going to break this down so you can see it. We go right down to pharmaceuticals. Bam. This is, so we know that it's in the healthcare sector. It's in the pharmaceuticals industry. So that whole industry did bad today, except for this one company, VTRS. I don't know what's going on with that, but VTS is right here. So this industry inside the healthcare sector did bad. All right, so we verified that. We can go back to analyze. We go down here to company profile. Zoetis, I'm already off the screen. The website is right here. Links for the website are down in the description for your convenience. We're going to read a little bit of this and go over to their website. Zoetis Incorporated engages in the discovery, development, manufacture, and commercialization of medicines, vaccines, diagnostic products, and services, biodevices, genetic tests, and precision animal health solutions for the animal health industry in the United States and internationally. Bam, I did good that time. So we pull up the website. There we go. Put the ticker back on the screen. All right, get the disclaimer, and then put me back on the screen. There we go. All right, I want to zoom in. So we pretty much know what their goods and services are. They deal with medicines, vaccines, pharmaceuticals for animals. I don't think they mention anything about people, and they showing a lot of animals. So it seems like, well, here's some people. They on a farm or something. I see a cow or a horse or something in the background. I see veterinarians, livestock producers, pet owners of in over 100 companies. So yeah, and R&D means research and development. So they definitely spending money on that. It looks like it's animals. I think their focus is on, let's see, as the world's leading animal health company, Zoetis is driven by a singular purpose to nurture our world and humankind by advancing care for animals. That's what confused me, because I seen humankind. I'm like, I see a whole bunch of animals. This is the first time I seen them say something about a human. So they do medications and stuff for animals, which could be important because we need livestock and, farms and your pet. People love their pets. They'll go crazy over pet. Ooh, boy. Yeah, they be dressing them up better than they do their kids sometimes, and feed them better than the kid too. So reasons why we do it: cats, dogs, horses, beef, cattle, pigs, fish, poultry, sheep. Okay, all right, we get it. We know what they do. We got it. They even got seals on here. Is that an otter? I don't know. He in the water. He a mammal that deal with the water. We know that for sure. So since we know what they do, we can go down to the bottom. All right, we're going to look at our story. We're going to look at careers. So we see careers, and where is investors relations? Did I move too fast? I don't see it, guys. I don't see investors relations on here. There it is. It's in orange. No wonder I didn't see it. So we see investors relations, careers, and our purpose. So we got that, and our story. So let's go to our story. Let's keep it moving. Our story. At Zoetis, we nurture our world and humankind by advancing care for animals, powered by rigorous science, transformative thinking, and partnerships that make a healthier future possible. All right. They have a video you can play. Remember, the links are down in the description for your convenience if you want to browse over this website a little bit more in detail compared to what I was doing. So they got about us, what we do, why we do what we do, how we do it. Oh, they breaking it down. All right. So there's a lot for you to dig through if you want to find out what's going on. So that was our story, I believe. So let's go to purpose. I think I seen something about purpose. Man, I need to circle stuff on this screen. I can't do that. There it is. Our purpose. It is. It's right here. Bam. So on purpose with Kristen Peck. So somebody getting interviewed. Purposeful leadership with impact. a conversation with Jason. Dr. Jason. I'm not even going to try to pronounce that next one. Veterinarian, entrepreneur, and more. So he might be the guy running the company or a founder or whatever. So there's a lot of people here. Scroll, scroll, scroll. All right. Let's go to careers, guys. There's a lot of people. They went from a whole bunch of animals to a whole bunch of people. So let's go over to, all right, we seen purpose. All right, careers at Zoetis. Let me go over here, careers at Zoetis. I'm looking for the benefits. That's why I'm over here. So they're broken into two sections, U.S. careers, international careers. I'm scrolling over this page, looking to see if something jumps out and say, hey, here go the benefits, and I don't see it. So let's scroll up to the top, see if it's something I missed. No. Join us in careers. I'm gonna click on U.S. careers and see what happened. Of course it did. It opened up a whole nother website. So let me bring this over here. We're just gonna go quickly through this and see, just for kicks and giggles, if we can find the benefits. All right, zoom, 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 zoom. All right, full-time, part-time, blah, blah, blah. No, guys, the benefits ain't over here. It don't take that long. We'd have seen it already. That's a long list, so we know that ain't it. So we can get out of here and we can go ahead and go to investor relations and we can go over here and look at what happened on the charts. So investor relations, they opened up another screen. So we're going to bring this over so you can see it. I'll move a little bit faster so you can catch this. All right. So blow that up. Bam. Zoom in, zoom, zoom. Got it. And then put that back. All right. So here's the investor relation. Here's the stock price. They trade on the New York Stock Exchange, NYSE, ticker symbol, blah, blah, blah. I'm going to scroll over this page, see what we can find on the home page of investor relations. That's all we see. Go to the top. Stock information. Yep. Stock quote, stock chart. And they have other tools here. And it does look like the company pays a dividend. So let's go to stock quote. And here's what they have available on the website. Yeah, it's definitely dealing with animals. Look at them. That's free range right there. Stock chart and some investor tools. Okay, we got it. Now let's go over to Thinkorswim. Bam. Let's pull them up on the charts. Let's get some technical analysis going over here. Oh, we. If you know how to read the chart, you be saying, oh, we too. But they gap down, baby. This is a big drop from boom, boom. So let's zoom out because I've never looked at this company before. So let's go and look at a 10-year weekly chart so we can get a feel of the price action over the last 10 years. Okay. So out of the last 10 years, it looks like the lowest they've ever been, well, in 10 years, most recent 10 years, was $45.28. The highest they've ever been is $249.27. And I would say right here, with the price ain't even up here anymore. So I'm not even going to waste my time with those technicals. We're going to focus on the technicals down here where the price is actually trading at. And I see something interesting. This low right here. So I'm going to zoom in here. So this is what I mean by like the technicals. When we go back and look at historical data, it doesn't repeat, but it rhymes. So if you can see this area here too. So if we put a line right here, and what I'm doing, I'm going back using the dips or the pullbacks on a historical chart to be able to see if we can find some support from historical price action to find out what could possibly happen with the recent price action. That's what we just did. And this looks like distribution. So we talked about consolidation when we talked about LYFT. So now we're about to talk about that again right here when we look at the weekly chart. So overall, we can just say that this has definitely been in a downtrend. Okay. So I'm going to show you this on a tool real quick. This is not the tool I want to use. Where is that tool at? The channel. Here it is. So if I go here and I double this up, you'll see it. It's been downtrending for the last 3 years, but well, not 3 years, like two years, because this will be a whole year here. Then we half a year here, half a year here. For about 2 years, this has been downtrending. And then right here, I would say it was trending sideways. So I'm gonna show you what I see. The price was in there. You see it? So this was a sideways trend. It was trending sideways, and then it started a downtrend. So it was down, sideways, down. And we're looking at a 10-year weekly chart. So it's in a downtrend. We got that established. Now I'm gonna zoom in over here, and we're gonna look at the consolidation that happened on the weekly chart, okay? So I'm seeing this as consolidation, which I talked to you about when we were looking at LYFT. The price is staying in this tight range for an extended period of time. And since these are weekly candles, we need to get this time frame, okay? So I'm gonna use this tool to get the time frame. So that's 182 days. So I'm gonna pull up my calculator, and we know that 30 days are in a month roughly. So what was that number? 182. So 182 divided by 30. So about 6 months. So about half a year, this was trending. This was trending sideways. The trend was a sideways trend. This was consolidation. So if the price had went, I can't draw this, but I'm like, nope, that ain't gonna work. I wish I had a draw tool, but let's just roll with the punches. I do have a draw tool. I got it right here. I just ain't used it in so long. If the price went up, then this would be accumulation. If the price went down, which it did, then this would be distribution. Actually, I ain't used this tool in so long. I can make this look even better, guys. Y'all got time, and I appreciate y'all for tuning in. So we're gonna show out tonight. Let's erase this mess I just made. And I have an arrow tool over here somewhere. Here it is. Ooh, we about to get fancy. I'm excited. So here it is. If it went up, this consolidation would have been accumulation. If it goes down, which it did, then this consolidation would be distribution. They were selling it off to what they call retail traders or dumb money. Okay. And you don't want to be called dumb money, but that's what they call us because they don't expect us to make smart decisions in the market. Okay. So that was that. So let me go back here, and I'm back on my charts. Yes, I am. So I'm gonna remove that, and I can hide those drawings. I ain't used this tool in so long, guys. I'm just gonna erase this because I don't need that right now. But I just wanted you to see what that was. Okay. So now we're gonna go to the 1 year daily chart. I'm gonna get faster as I start using these tools again. So now we're gonna go to the 1 year daily chart, and boom, since we did most of our technicals on the weekly chart, when we go to the daily chart, we already got it done, guys. You can see what I said because now all they did was break the weekly candles up into day candles. It was consolidating for 6 months, basically trending sideways, and then boom, it gaps down, right? So what we like to use as a gap down indicator for you to be able to see that on this channel, we just go right in here. Matter of fact, let me zoom in. So I'm gonna zoom in so it'll be easier to see. So the low of this candle is gonna be right up here. You got D for date, O for open, H for high, L for low, C for close. So we looking for the close. That's where it's gonna be. Well, we're looking for the low. So it'll be L. So the low was $110.94. And then we're looking for the H on this one. So the high is $91.64. And I'm going to draw a rectangle to show you the gap. That's the gap from the low to the high. And if we wanted to be precise, we would use the low of this candle right here. So the low of that candle was $110.94, which we have. So we got that. And then we need the high of this candle. So the high of that candle was $91.64. It was off by 1 cent. Bam. And now we want to change it to yellow. So we make these yellow so we know where the gaps are. So this is where the price gapped down. There was no trading. There was no trading activity during regular trading hours. And that's what created this gap or this window. And the price gapped down. And they had earnings today. And it was announced before the market opened. So this was the price reacting to the earnings, which we talked about earlier with LYFT. So we're going to see the LYFT stock react to earnings tomorrow because they announced earnings after the market session was over today. So this was a huge gap down. So it gapped down from about $110 down to 85. Is that what I'm seeing? Yeah, so it dropped about 35 bucks. That's crazy. Woo! All right. So this consolidation area for me, that's going to be resistance. And as far as support, well, this is going to be resistance. This $90.14, this is going to be resistance until this get back above it, and then the bottom of this gap or the bottom of that window. So I would say it's going to be a resistance zone. So it needs to get through this area right here. This is what I'm seeing in my technical analysis. And then when we come down here to the bottom, we use the historical price levels to get this number right here. That's $78.90. So if the price comes down further, I'm looking for it to find support on that $78.90. So that's what I'm seeing as far as these technicals. And it is trading. We're looking at a 1-year daily chart, and it's trading below the 9-day simple moving average. That's this dashed green line, and below the 200-day simple moving average. And that's my dashed white line. Thank you guys for tuning in. Hit that like button. I definitely would appreciate it. So let's get the stock quote for this company, ZTS. Okay, let's get the stock quote for this. So let's pull up my floating data box. Bam. So ZTS opened today at $90.67. They had a high of $91.64. They had a low of $85.31. And they closed today at $87.31, which was a trading range of $6.33. When we look at the trading volume, they traded just shy 30 million shares of this stock today. So we need to go and see what the average trading volume is for this stock. So if we take me off the screen and we look at my volume label, oh my gosh. Guys, their average trading volume is around 4 million in a trading session. And they did 30 million. That's crazy. They had extreme volume today. I wonder what happened in their earnings. And their previous volume on Wednesday was about 5.2 million. So this was higher than average, but this spike is crazy. And we about to find out how crazy right here with my beautiful labels right here on this chart. So right here, the volume rank percentile. Out of the most recent 252 trading days, no days had higher volume than today. The volume rank percentile is 100%, which means that today's volume was higher than 100% of those candles. The volume was nuts. They ain't seen no volume like this on this stock all year, and that price was caused of whatever happened with earnings or whatever was going on with this. Oh, we identified it already. It was distribution. So somebody that knew what was going on was selling for 6 months. They was just getting rid of it for 6 months doing the distribution. So we identified that it was distribution because of the way the price broke out, which I talked about earlier. If it had broke up, it would have been accumulation, but because it broke down, it was distribution. So I don't know if the company itself was selling shares like that or institutions were exiting their positions. But guys, that was nasty. All right, we finished this. So let's go ahead and go to the winner. We can go to the winner. So let's go up here to Market Watch and go to quotes. We can take the loser off the screen and we can put this on the screen. This should be here. Let's talk about the trading platform. Yep. All right. So we're going to click this percentage change and boom, the winner for today is Datadog. Datadog Incorporated. They went up 31.33% today. Nuts. I bet you they had earnings today too. Nuts. Oh my goodness. So if somebody invested $1,000 in this stock and they got that 31.33% return, We will multiply that times 1.33%, and boom, they would have made a ROI, a return on investment, of $313.30. So that would have been on top of their $1,000, which would have been their principal. So the total investment would have grown to $1,313.30. Oh my goodness. Woo, man, what an opportunity in a day. So the previous close was $143.71. That's what they closed at on Wednesday. Today, they closed at $188.73. So let's go to analyze. Ticker DDOG, they are in the information technology sector. So let's go over to visualize and see what we can find over there as far as like what's going on with some other companies in that sector. Are they performing well as well? So we go to Market Watch, we go to visualize, and we can go back up here to S&P 500 to drop this down. Well, it's not open. So we go to information technology, bam. So we're looking for DD. It's going to be a bright green. It's right here. Okay. So we're going to drop this down. Take me off the screen because I might be blocking this. You can't see it. We need to find out where they are. So it looks like they're in the software. Nope. Is that? Yeah, software. So if we go to software, Datadog. Yep. So I don't see much red in here. I think I only see this one. So the information technology and the software industry did well today. It wasn't just Datadog. So in the information technology sector, inside the software industry, they all did well today, pretty much, in the S&P 500 companies. So let's go to analyze. We did our little research on that to find out how that's working. Now we're going to look at the company profile. Let me take me off the screen so we can read the description. Here we go. So here's their website. The link for the website is down in the description for your convenience. Datadog Incorporated operates an observability and security platform for cloud applications in the United States and internationally. Okay, now we're just going to go ahead and go to their website. My mouth dry, guys. I need some water. Here's their website. Here's their ticker. Let's put that back. I'm pushing these buttons too fast. Hold on a second. Put their ticker back on the screen. I messed up. I'm going to have to manually do this. I got it. Drop that down. That's what it is. Okay. So Datadog, put them back on the screen, put me back on the screen. Look like I'm lost. I'm like, where is he at? Okay. And then we put this disclaimer up there for the financials. Hit it again. There we go. All right. So we're on their website. We read what they do. But we're going to scroll over this homepage. Here's about. And here's investor relations. So we know where to go for that. There's the careers, products. So they deal with security. It's a software company. Okay. Software. It's different things that they offer. So we're going to scroll over and see what that is on their homepage. Inside any stack, any app at any scale, anywhere, AI-powered observability and security. So here are some of their customers: Samsung, NASDAQ, Korean Air, Shell, HashiCorp, SNCF. Okay. Infrastructure, state of AI engineering. Join our pack. We are at the bottom of the page. They are an important software company. Security. Where are the rest of their, oh, here are their customers. So we click right there. We can find out some of their customers. Look at the Lego, one of their customers. This is so fascinating to me. Whole Foods. Whole Foods is owned by Amazon. SoFi, that's a financial company. PayPal, financial company. Comcast, communications company. See, when we do our due diligence, we should know this stuff. We will find this stuff out. We do our due diligence. View more. There's even more. Look at all their customers. And some of their customers are listed in the S&P 500, guys. I don't think it's a coincidence they the biggest winner today. Look, Uber. Uber is listed in the S&P 500. That's a specific division inside of Uber. Uber Freight. Man, This is crazy. Okay, I'm impressed. So we know what they do. We know who their customers are. I like the fact that they showing you who their customers is. That's great. So let's go up to the top. Let's go to about. That's where we need to go. So we're going to go to careers. I don't even see anything about, come on now. Oh, did it pop up on a different? No, what's happening? Oh man, that was slow. That was terrible. Had me think I ain't clicking. Oh man, it scared me. So careers, I'm looking for the benefits, guys. That's where I'm at now. They got videos. You want to watch them? Links for the description is down in there for your convenience. You can go look for yourself. They got some awards. Okay, welcome, culture. Your mouse over it here is a drop down. This is boring, so let me put some color in the background. There you go. Mouse over this and see culture, inclusion, workplace benefits. Okay, I saw that. So maybe that's what okay. Yeah, let's go to workplace benefits. Bam, investing in you. We believe in Datadogs. We believe Datadogs should have the support they need to maintain work-life balance, grow personally and professionally, and save for their future. That sounds amazing. So here are the benefits, guys. We're not going to read all this, but we're just going to browse over it real quick. Workplace benefits brought to life. They're giving you some pictures. Dog playing on the desk. Get off my desk, dog. Get off. Now, moving on, let's go ahead and go to, well, we need to back up because those are not even the options that we had seen before. Go to about. We can go to investors relations. I'm ready to wrap this up because we after 12 anyway. I appreciate y'all for sticking with me. So here's the investors relations. We're going to scroll over this real quick. We're about to wrap it up. I promise. We're about to go to the charts in a second. So here's the stock information, but we want to see if they have a chart on their website. Resources, here it is. And it looks like they have a few other tools. And we talked about the dividends for that other company, the other two companies, and we didn't look it up. So I'm going to clean that up in a second. So here's the stock quote. I don't see a chart. They lie. Stock, quote, and chart. Where you see a chart? I don't see a chart. Maybe they ain't load up. I don't see it. Let's move on. Let's move on. We done. We can get out of here. Let's go to think or swim. I was about to say think and swim. Okay, put this up. Here it is. Come on, come on, come on. Oh, I know what the problem is. This. Here we go. Charles Schwab. Yes. Okay. Now, what was the last company we just looked at? I can pull up. What was it? ZTS or something like that? It was the biggest loser. ZTS. I mentioned something about finding out if they paid dividends. So I want to clean this up for you just in case I didn't point this out. Their dividends are down here, guys. They pay 53 cents a quarter. Every 3 months. That's what I mean by a quarter. They pay 53 cents per share every 3 months. That's what I meant by quarter. It's the dollar sign with the dollar amount above it. And it looked like the dividend has slightly increased. Back here, while I'm covering it, it says 50 cents. And I can't read or make out, that's another 50 cents. So here it went to 53. So 50, 50, 53, 53, which is normal. So I'll give you a tidbit on that right now. Usually when stock prices decrease that pay dividends, the dividends increase as the stock prices go down. As the stock prices go up, I hope I said that right. I'm going to say it again just in case I confuse myself. When the stock price goes down, the dividend payout goes up. When the stock price go up, the dividend payouts go down. The dividends become less. So you notice how as this is trending down and sideways, the dividend is increasing. They do that because they're trying to entice people to leave their money in by paying them quarterly dividends. Like different companies use dividends as a strategy to try to control how people view their stock and how they invest in that company. Like McDonald's, for example. McDonald's is not in a growth phase anymore. Let me go here because I'm teaching now. McDonald's is not in a growth phase anymore. And by the way, guys, I need some followers over on Facebook. I need to have at least 100 followers in order for me to start live streaming on my official page. So if you could go over there and do that for me, I would greatly appreciate it. So what I was talking about, McDonald's. So if you invest in McDonald's now, McDonald's is all over the world. So think about it like this. If McDonald's is all over the world and you invest in McDonald's and your money doubles when McDonald's doubles, McDonald's ain't doubling no more. They all over the world. There's no more room on earth for McDonald's to keep opening up McDonald's. So since your money isn't going to double because they're not in the growth phase anymore, McDonald's pays dividends. So they're paying you and rewarding you for investing in their company by paying you a quarterly dividend because they're out of the growth phase. That's why they pay dividends. Now, before companies reach that level, they don't pay dividends because they still have room to grow. So since they still have room to grow, they know investors will be attracted investing into those companies because their money can grow and double and all of that from the actual stock price increasing. But since McDonald's isn't growing anymore, the dividend is attractive to people who just want to sit their money there and just collect the interest or dividends quarterly. So they're using it as a strategy. And as McDonald's stock price go up, the dividend goes down. And as McDonald's price goes down, the stock goes down, the dividend payout goes up. So that's giving them an incentive to leave their money in there. I hope that makes sense. So that's the tidbit for that. Now let's go to the company we're supposed to be talking about. I done went all the way to McDonald's. So Datadog, think of swim. Here we go. Bam. That ain't the company we're supposed to be looking at because I got to pull them up. All right. Datadog. DDOG. Bam. Let's do the technicals on. Ooh, wee. They gapped up, didn't they? Look at this, guys. Man, that's a heck of a doji right there. That's some technical analysis talk. I'm getting excited because I've been reading my book. But that's a huge gap, guys. That's a huge gap up. And it looks like they had earnings today, too. This is fascinating. I like doing these live streams because I'm learning with you guys. I ain't even going to hold you up because I have not put in this much screen time until I've been doing these live streams with you guys for the last, it's almost been like 3 months of consistently doing this. And I've been learning with you because this is crazy. This is a huge gap. So let's go ahead and put the gap here. So the high of this candle that I'm on right now is $145.69. The low of this candle is $179.47. So let's put the gap in here. And we'll make sure that it's right in a second. Let's just get it. Let's just get it up here. Bam. So we said the low of this candle was 179.47, 179.47. So it's a few cents off. Bam, 179.47. The high on this candle is 145.69. We good. So we got it. Now we just need to change this color to yellow, and that's our gap. So if we ever come back to this, we know that that was a gap up. So there was no trading activity during the regular trading hours between Wednesday's high and today's low, and they had earnings today. Now, were they mentioned before the market opened? Yes, they were. So they were announced at 8 a.m. Eastern time. Man, I think that was the call. Yeah, they were announced at 7 a.m. before the market opened Eastern time. The earnings were released. So I'm interested in knowing what was said in those earnings, because the stock went crazy after that. We're going to look at the volume and talk about that in a minute. But let's go to the 10-year weekly chart. Oh, looks like this company do this frequently. Well, this is supposed to be a 10-year weekly chart. I'm not seeing 10 years here. So this 2026, 25, 2, 3, 4, 5, 6, 7. Okay, yeah. So this is not going back 10 years. So this must mean that they IPO'd I would have to do some more research, guys. It's just not going back 10 years. Let's look at it like that. So out of what we're able to see, 1, 2, 3, 4, 5. Did I count that too fast? That's 3, 4, 5, 6, 7. So about 7.5 years. Their lowest price was $27.55, which you can't see, so I'll take me off the screen. $27.55, and they had a high of $201.69 over the last 7.5 years. So if we use this historical data right here to put resistance, we can see that it tested it 2 more times. This got above it, but it didn't close above it. The wick just peaked above that historical price level of resistance. It just peaked above it, and this is a weekly candle. So one of the days within that week got above that price level. And then this week, it tested it with that huge gap up, but it stopped just shy of it. You see that? It didn't quite hit it. That's what we're looking at right there. So now we're going to look for some support, but it's so high up, and we looking on a weekly. So on the weekly chart, it's trading above the 200-week simple moving average and the 9-week simple moving average. It's just crazy. So now let's go to the 1-year daily chart, zoom out. What are we looking at? It's wild. Yeah, that's the 10-year. Why it looks so similar? This is the 1 year. We got it. It just looks similar to me because that happened within this year. This right here, that test we talked about. And it was actually 2 days that peaked above it. So when we zoom in, we can see it. 2 days peaked above it, and then 1 day came to it. That's why it's important to break those weekly candles up. You get more details when you open up the candle. So like for today's candle, for instance, that's a day candle, but we have no idea how the price action actually moved within that day. So what we'll do, we go to the minute chart right here. And then this dark area is the price action for today. This right here. And I know it looked crazy because this move over here was an extended hours. That wasn't the regular trading session. The regular trading session, and now with this bright yellow in here, this is a mess. We're not even gonna talk about that right now. But the price, you see how the yellow, there was no price action in there, right? Let me show you like that. You see the yellow is beneath it. So when we go into the minute chart, we can see that none of this price action up here are all minutes. These candles are all 1 minute. None of them are in the yellow because this area right here was the minute that created the low. Can you see that? These candles created the low of the candle we seeing, and that was the price that we used to create the yellow zone. I hope that makes sense to you. So all that price action we seen, that whipsaw action, we just seen how that moved looking at the minute chart. I don't really see any technicals with this besides this high. Here's our resistance. Our support is going to be the top of that window. Here's where it closed. So it's in the middle of that range. So what I'm going to do, I'm going to put a support line right below that crazy price action. And then we can see that has been tested as support a few times based on what's going on over here. Then these 2 candles were resistance to that line. So that's definitely an area that I'm seeing as a support and resistance line, a valid support resistance line. And this is definitely resistance. That's been holding the price below that for the last 7 years. We just looked at it. Okay. So let's get this stock quote and wrap this show up for tonight. So here's man, you guys are some troopers. Thank you so much for staying tuned in. I'm proud of you guys. And it's late too. Man, y'all serious. So Datadog opened at $187.99. They had a high of $198.60. They had a low of $179.47, and they closed today at $188.73, which was a trading range of $19.13. And when we look at the trading volume, they traded just below 26 million shares today of their stock. So we're going to look at what the average volume is in a trading session in the day for this company. So we took that off, take me off the screen so we can see this label. So the average trading volume is about 5.5 million shares in a trading session. And they did 5 times what they usually do. 5 times 5 is 25. They did 25.9 million shares traded in today's session. And Wednesday's session, they did about 8 million. They did 8 million. So it was above average yesterday as well. So leading into the earnings day, volume was increasing. We see a little doji right here. And then boom, we see this gap or this window up. And then we see this wide doji, wide, highly volatile. Okay. So that's what we got with that. Now we need to talk about the volume rank percentile and we can wrap the show up. So out of the most recent 252 trading days, only 2 days had higher volume than today. So the volume rank percentile was 99.2%, which meant today's volume was higher than 99.2% of the most recent 252 trading days. Bam, we did it. So let's go right here. Ooh, man, it feels good to get through a show. You already know. I hope that you learned something and I hope that you earned something. Thank you guys for joining me tonight. I really appreciate it. This is the longest I've had 3 people sit here. So I appreciate all 3 of you. I've done 2 interviews with up-and-coming content creator Tiara Owens, sharing how I got started investing in the stock market, my profits and losses, and links to that is a link to that playlist of interviews are down in the description. And make sure you tune in weekdays following a market trading session at 11 p.m. Eastern time. Take care and God bless.